Hello, my friend. Welcome. I just restructured my portfolio for 2021. So in today's video, I'd like to share with you my thoughts on the global economic outlook for 2021 and the main themes that drive the stock market, bond, and commodities. Let's dive right in. Well, first of all, let's do a quick recap for 2020. In 2020, we all know the unexpected happened. The main theme that drove the asset markets are economic impact of the pandemic and how countries deal with the pandemic, including monetary policy and fiscal policy. If you combine these two themes, you're able to see that the world financial market has gone through periods of risk off and risk on. For example, US stock market has dropped massively at later half of February and early March. Oil prices dropped to negative territory for the first time in history. This was a typical phase of risk off. Then the central bank has rolled out unlimited QE. US government began to issue pandemic benefits to households and businesses. We then saw the market began to risk on rapidly. Now oil prices has bounced back to $40-something. Because how countries are managed are different, China was able to recover much faster due to the top-down approach of government control. The US and the West in general is experiencing the second wave, but the financial market largely seems to have ignored the second wave. Why? Because unlike March, now people know how to deal with the pandemic. The market is calm instead of panic. Because central bank has printed so much money that provides a cushion to the financial market, it's not about what actually happens, but about the confidence the market has. In 2021, there are three forces that affect the market confidence: whether the pandemic is going to keep getting worse, how fast central bank and government support retract, and most importantly, COVID-19 vaccines. With the good news about the COVID-19 vaccine keeps rolling out, the confidence in the world financial market is very high at the moment. Even though the second wave seems worse than the first one, the financial market is largely unaffected, which can be reflected in the oil price and the stock market. With the promising development of the COVID-19 vaccine, most likely we're going to see the pandemic coming to an end in 2021, at least in the financial market, which is months ahead of the actual economy. China is half a year to a year ahead of US and Europe in terms of economic recovery. The economies in the US and Europe will most likely mimic China's progress in the second half in 2020. If we can have the vaccine in 2021, there won't be more expansion of the pandemic. The Fed won't print money on a large scale. They're most likely going to tentatively retract the monetary support. Because they need to manage the expectation of inflation, the reserve currency status of the US dollar, and the government deficit's impact to the US dollar, we're probably going to see an economic recovery and a gradual fade out of the policy support in 2021. So what does that mean for stock, bond, and commodities? Let's talk about the stock market first. If you look at the global equity market, whenever there's a massive printing of money or easing of interest rate, usually valuation of growth and technology stocks were pushed up first and higher. These stocks are very sensitive to liquidity. Now if you look at the outperformers in the stock market in 2020, they're mostly growth and technology stocks like Tesla, Amazon, or Netflix. While they're all great companies to hold for a long time, but just look at 2021, I would expect a change in style in performance. Because we're likely to see a retraction of liquidity by the central banks, the value stocks may outperform growth stocks on a risk-adjusted basis. Cyclical sectors like financials and materials will probably have a better return than 2020. In addition, the industries heavily hit by the pandemic will start reversing to their normal operations and valuation, such as airlines, hotels, and restaurants. For the allocation of stocks, I would expect value stocks would have a relatively better performance. For bond, my general outlook is neutral to negative. I'll talk about China and then US. Because China's recovery is ahead of US, it could be used as a reference. If you look at Chinese bond market, it started to go down in May until now. It's very likely to go down further because two important forces go against bond. China's economy is going to have a double-digit increase in the first quarter of 2021. Second quarter is not bad either. Even though the double-digit increase in the GDP should already be priced in by now, I expect the market will still be excited when the number comes out. This sudden rush of excitement will keep pushing the bond price down. When the economy becomes better, monetary policy is tightened. this is another force that is negative for bond price. So for China's bond market, I don't think next year will be a good choice, at least the first half of the year. For the US and Europe, it's lagging in terms of economic recovery. Bond market most likely is going to follow China's steps when the economy becomes better and central bank's easing retracts. The 10-year Treasury yield started bouncing back in August, which is 2.5 months lagging behind China. Inflation, economic recovery, and normalization of monetary policy are all negative forces for bond. While you do want to put a portion of your money into bond to protect you from failing expectation, I do feel like next year the bond could be... It couldn't hurt you much, but it can't help you either. I'd like to talk about one commodity on a macro level and why I think this commodity may present a good opportunity for the coming year. I've never realized so many products we use on a daily basis is based on oil until I studied it. For example, polyester in clothes, PVC used in pipe, doors, and windows, detergent, paint, phenol in aspirin. Having said that, with the normalization of the world economy in 2021, oil could be one of the biggest beneficiaries. Oil price is a reflection of demand in the economy. There are over 30 downstream industries of crude oil, including construction, textile and apparel, pharmaceuticals, etc. When the economy normalized, the demand from the economy could pull oil prices up. However, if you look at the futures contract with different expiration date, they're neither contango or backwardation. The price is largely flat. So this means the market doesn't think the demand side of the economy will recover as fast as we mentioned. If they think demand will recover quickly, we should see a contango, meaning the contract price should be increasing month by month from January to July. Here's why Ray Dalio says you need to bet against the consensus and be right in order to make money in the market. This could be a mispricing by the market. I like to think about the post-COVID economy as a continuation of the prior COVID economy once everything goes back to normal. If you look at the oil price prior COVID, it's hovering around $60. Now it's about $45. In general, I think 2021 will be a good year for the economy, the stock market, and some commodities. A lot of people likes to compare the current crisis with the financial crisis in 2008. I don't think that's a fair comparison because of the current crisis is not the result of a debt crisis like in 2008, but something totally out of blue. The financial system is very sound prior to current crisis. So I think once the vaccine is out, if you use China as a reference, the economy is going to recover faster than 2008. But as always, I could be wrong. As the old saying, don't put all eggs in one basket. Stay diversified. Having asset classes like bond or gold in your portfolio, even though the prospect is not very good, you might appreciate later. Thank you very much for watching it to the end. If you think this video is valuable, please hit the like button. It gives me a little kick to the YouTube algorithm. Try to subscribe and hit that notification bell so you can see my next video the minute I release it. My name is Alvin Jing. I make videos about economics, business, and investing. Well, thank you very much, guys. Hope you enjoy the rest of your day. Cheers!